Welcome to the channel. Today is July 29th, 2024. And what we wanted to talk about today is how the Federal Reserve needs to lower interest rates. I got this up here because I wanted to put a, a focus on the 10-year yield. I mean, it was only like 2 months ago, the 10-year yield was trading at about 5%. I really should have locked in that 5% in bonds, and I could have had it for 10 years. Because as you know, bonds, when bond yields go down, the prices go up. So I could have made money off of this 10-year yield trade. And I think it's going lower. The Federal Reserve is behind the curve. They meet this week on Wednesday. They're projected not to cut until September, but I believe they need to cut right now. And one of the reasons that they may not be cutting, last quarter, which reported last week, the GDP was up 2.5%. I'm really not a conspiracy theory. As an investor, I have to base my information on facts. I have to, once I get the facts, it can change my decision. But it's no way to me the economy grew at 2.5%. I talked about Big Ward, who's a trucker. I talk about my friend who's a truck driver. They're not one. My friend, he had to change the routes he rode. He could no longer have the dedicated routes because the store that he was delivering, the store that he was delivering to, just wasn't getting enough deliveries, which in affects the manufacturer of those goods, and of course, which affects the employees at the final retailer once they get in the store. And shoppers just aren't in there shopping like they used to. I'm not talking about COVID. I'm talking about last year. I believe this economy is in really bad shape. I just got a couple examples. I mean, we're supposed to be doing so good. The auto companies reported last week terrible earnings. They reported terrible earnings. Ford stock down 20% since they reported. Basically saying ain't nobody buying no cars. They can't sell enough cars. I know, you take 2 years ago, especially during COVID, you ride by the dealership, there was no cars on the lot. They barely had any cars. They were selling them so fast. The manufacturers that was having problems manufacturing them, which probably helped shoot the prices up. But right now, you ride by a dealership, the car lot is packed. They're not selling any cars. I don't know how we grew at 2.5%. I just don't know how. I went and looked at a Jeep Wrangler when I was taking my car to the shop, and I couldn't believe they wanted like $80,000 for a Jeep, a four-door Jeep Wrangler. I bought a Jeep about 4 or 5 years ago. I only paid like $25,000 for the car. I got a good deal, but $25,000 for a Jeep Wrangler. Now you want $80,000? And then on top of that, since interest rates are so high, your loan might be 7%, 8%. So who wants to buy a Jeep Wrangler and with a 7 or 8% interest rate on it? I know the last time I bought a car, you can extend it all the way out to like 7 years. Now, I mean, if to pay off an $80,000 Jeep Wrangler at a 7%, 8% interest rate, you about need 10 years. And this is a Jeep Wrangler. There's trucks now. The truck I bought, it's a 2016. I paid $43,000 for it. I looked at that. They want $80,000, $85,000, almost double the price of a car that I only bought 8 years ago. That's crazy to me. No one's buying any cars. A lot of people don't have no money. The foreign company that owns Chrysler now, they reported earnings. They reported terrible earnings. And what I believe what's going to happen, I remember the days when they would have to come out with 0% interest rate, rebates, $8,000, $10,000 rebates on the car. They're going to have to go to that. They already announced, the Wrangler, the Chrysler announced that they're going to start less production. That means they're going to have to be laying people off. They're going to be producing less cars. I believe this economy is in real trouble, and they need to lower interest rates, and they need to lower interest rates as soon as possible. General Motors reported they're only down like 9%. They reported decent earnings. Tesla's earnings was terrible. Their earnings was terrible. They made most of their money off of selling rebates on emissions and not selling cars, not making money off cars because they happen to mark them down a lot. But Not good earnings. Stock is up. I wouldn't be buying Tesla. I believe that we are in a bubble. Car bubble, house bubble, stock bubble. Everything is bubblicious. And these things are going to have to come down. Asset prices are too high. It's just something that I don't, most confusing thing of my investment career. Normally, the stock market is a leading indicator, and knowing how bad the economy is now, it should 6 months ago, normally the stock market to be down, predicting a recession. It's not predicting a recession. It's not. UPS reported earnings. Terrible. Stock still down. I think about 128. It was at like 148. They're doing horrible. No one's shipping anything. No one's going into UPS. Well, some people are, of course, mailing something. UPS has a real big business where they manage uh, other companies. They manage in their warehouse. They manage their products. So when someone orders something online, UPS just sends it straight out from their warehouse. No one's buying anything. No one's buying anything. Housing prices, I believe, is in a bubble. And just my prediction of what's going to happen as they start lowering interest rates. Some people haven't been wanting to sell a home because if you got a low interest rates on the home you got right now, and even though your price is up a lot, but you got to live somewhere. So basically, it's saying that you sell your house today. Now you're buying an overvalued house, but instead of giving up your 2.5, you're giving up your 2.5% interest rate, and now you're going to a 7% interest rate. No one wants to do that. So as interest rates come down, I believe, I might be wrong, I don't know. But as interest rates come down, you're going to see more people listing houses for sale. And the more houses for sale, the more you're going to have to mark down your house. So I just believe that we're in a bubble. And we're going to see how this stock market go. But one of the things that in my investment career that it seems like it always have to happen, something has to break. And I've been trying my hardest to figure out what it is, but I don't know what it is. I think it may be like if the Fed cuts interest rates on Wednesday, I think that'll show investors that the economy is doing worse than what they believe they're doing. And Powell is saying we need to do something because they're saying he's going to cut in September, projecting he's going to cut in September. Just a couple months ago, he was saying he was going to stay higher for longer. But we need to cut interest rates, and we need to cut interest rates now so we can get this economy going. We got to get the economy going. But what I'm looking for is I'm looking for the stock market to drop, and I'm looking for it to drop significantly. And I know that sounds bad, but it's really not bad unless you are a owner of a whole lot of stock. And as I told y'all before, right now, I worked my way to about 65, 35. And I'm ready for the big downturn. That's when money made. That's the only time I've ever really made a significant amount of money. 2008, we had a stock market that, well, 2009 dropped significantly. I was there. I was there to able to purchase companies real cheap. And then the stocks went up. Like I said, I bought American Express at 10, sold it around 90, which was probably a mistake. It's almost at 200. But that was I think I sold all those in 2014. So that was 10 years ago. I made other investments. So, I mean, I did all right. I didn't have to hold on to American Express. But those are just some of the examples. Bank of America at $2.75, 74 cents, somewhere around there. I sold it at like 24. It's at like 48 now. And I believe it's overvalued right now. So a lot of things may fall when the realization of this economy shows up in the stock market. And I know they say we've been having this rotation, which I truly don't understand. And they're saying it's because he's going to lower interest rates. And so the Russell 2000, a lot of the companies in the Russell 2000, they don't have nowhere near the capital of companies like Meta, like Microsoft, like Apple. They don't have that type of capital. So they have to borrow a lot. So if interest rates come down, it'll be cheaper for them to borrow. And so they say that's one of the reasons for the rotation. I believe one of the reasons for the rotation is people is buying. They're hearing the Russell 2000 is going up. The Russell 2000 is going up. So they're buying ETFs in the Russell 2000. And so that means that if you buy an ETF in the Russell 2000s, the owner of the owner of the ETFs have to buy the stocks within the Russell 2000, which is pushing those up. But if we get the downturn, I believe we're gonna see those small cap stocks. They're gonna be, I believe, gonna be leading the downturn down. Everything's gonna come down, I think. I might be wrong. No one's watching the videos right now. No one wants to hear that the market is going down. But when the market do fall, I'll be able to say that I was right. And I think it's more than likely going to be the end of this year, the beginning of the next year. And there's some people out there predicting a lot worse because we got this weird thing going on with the banks and with the federal government. So the federal government, as you know, is having to borrow a lot of money to fund the country going. And as those old bonds mature and they got to get new bonds, those old bonds had low interest rates. And now these new bonds are going to have high interest rates. So some people predicting the doom of America. I'm not doing that. I believe in America. I believe in America, so I don't believe that America is doomed. But when we're already paying $1 trillion in just interest, and we have to start paying higher bonds, they're saying it could go to $2 trillion. Just in, so the taxes that they collect. I mean, we're paying $2 trillion. I believe we're an $8 trillion economy, and we're paying $2 trillion in interest. It's not good. It's not good. But I believe in America, so I'm not a doomsdayer like that. They'll figure something out. They always do. No one wants to see the market go down forever. It's Americans' wealth. But if we have housings going down, stock markets going down, it could be real bloody out there. So all I can tell you investors out there or new investors, have something prepared to be able to take advantage of that if this opportunity, not even if it wins it come. It always comes. 2000, 2008, during COVID, the downturn always comes. So good luck investing out there. Be safe. Be ready to make some money.